This is the briefing for Friday, April 12th. Very interesting 2 days of trading, or the last 2 days of trading. After the PPI numbers came out, it was very interesting to see the market take the numbers positively, especially knowing that there were some really miscommunications within the PPI numbers themselves concerning gas prices. But I'll leave that to people that are more involved in fundamental analysis. But anyway, you can see yesterday we broke out of this area of rotation in the spiders and in the Qs. You can see it's different here in the Qs. And then we went up to about the 519, 520 area. And then, of course, gapped down this morning. And a lot of damage was done in terms of the internal structure of this market in today's trading. So it's going to be very interesting to see how we begin the week next week. Now, the important aspects here are that we have different support and resistance levels. I call them key reference areas. Now, the difference between those are basically time frame and in resolving time frame analysis. So you can see right here that I have a support area that comes in right around the 512 area in the spiders, and you can see that rotational area there. Now we broke out to the upside, and you can tell when you've got those key reference areas correct. Because you always get pauses around them. You can see even on this breakout here, we had a pause at this upper extreme before we saw the breakout to the upside. Then coming back down, we have a little bit of a pause here. And then, of course, you can see the reaction off the 512 area before we broke through it. And then another pause at 510. Now, 510, you can see the greater degree of time in terms of this pause. And the same thing with the Qs, but you can see that this is a greater degree pause than we've seen here and or here or here. But this is around a very important longer term key reference area. And I'm going to go back to the longer term chart here. The daily chart. Now you can see here, now I've been talking about this for the past several days, if not weeks, that basically this is a trend. This is the definition of a trend. It's a series of higher highs and higher lows. So the trend is still intact. However, the last higher low comes in right around the 510 area, which is this area right through here. So you can see we came down and traded right through it and then closed just above the 510 area in the spiders. Now you can see volume is increasing. This is 52-week highs minus 52-week lows. Now you can see for the last 2 to 3 weeks, that has been deteriorating. Bread has been deteriorating. You see the trend in bread has been deteriorating. So even though this has been a pause or a rotational pattern, the internal components of the market have been deteriorating all through this time frame, leading potentially to a potential breakout of this daily area of rotation and potentially suggesting a counter trend rotation that is correcting this run in a longer time frame, which would give us then this type of correction. Now the same thing in the Qs. You can see volume beginning to increase as we started to come down. We traded through the 430, 440 area. Next level of support is going to come in right around the 434 area, and that would be this next higher low. It's also the lower extreme of this area of rotation. You can see that bread has been deteriorating in the NASDAQ as well. And then in the Russell really has been showing more weakness than the others. I would say that the NASDAQ, in terms of the Qs, was showing more strength, the spider second, and then, of course, the Russell, the IWM, third, lagging. Now you can see the Russell has closed significantly below, maybe significantly is too strong of a word, but it has closed well below the 200 area, in the 198 area. So this suggests to me that the Russell is already breaking out. Now the next level of support comes in right around the 196 area, and then below that is going to be the 186, 187 area, which would then, if you look at this, you can look at this as a area of rotation going all the way back to December of last year. and then you get a pause at the upper extreme right through here, a false breakout, and then rotation back through the range. So breaking the next level of support in the Russell, this 196 area, is going to be important. But what's really important is going to be this 185, 186 area in the Russell. You can see volume increasing, a little bit of volume dip in the IWM today. The breadth in the Russell is declining as well. Now, we did reach a point of being extremely oversold in today's trading, as you can see here. This is the NYSE, and this is the NASDAQ. So it's going to be interesting to see if we see some follow through in Monday's trading and what happens to the market at that point in time. Now, because of that, what to watch out for on Monday is watch for the potential for a lower low with a divergence in breadth, which would then suggest that we're going to see some type of rotation up to work off the oversold condition. What is going to be very important on Monday is that if we see more rotation to the downside, no divergence in breadth, and then some type of rotation up off of a longer term support level. But this 510 area in the spiders, I was speaking to somebody today who called me and wanted to discuss the market and my feelings about it. And I just told him, I said, watch the 510 area. That area in the spiders is very important. If that area is broken and traded through and closed below it significantly, with the internals confirming the breakout move, that's going to suggest that the probabilities have now increased that we're in the process of developing into a greater degree time and price pause or counter trend rotation to this move here. Now, whether that becomes a bear market or not is just too early to tell. What we have to watch for is all of these lower support levels that I've marked out over a period of time, that if they're broken, then that's going to open up the higher probability of trading down to the next lower level as well. Now, this is really very interesting. This is the percentage of stocks above the 50-day and 200-day moving average in the S&P 500. This damage was done today. So you can go back. I can go back. 55 was where it was yesterday. Only about 40% of stocks in the S&P 500 are still trading above their 50-day moving average. And this is the percentage of stocks above the 200-day moving average. And you can see what happened in today's trading as well, going from 72% down to 68%. So you can see the damage that today's sell-off occurred from an internal perspective in the spiders. This is the NASDAQ. Percentage of stocks above the 50-day moving average, only 35%. Above the 200-day moving average, only 50%. And in the Russell, it's even worse, 30% above the 50-day moving average, and 47% above the 200-day moving average. So important for Monday, once again, is if this is developing into something greater in degree of time and price, we should not see, now we may see at the open, the guys who've been buying the dip all of these weeks that have been successful in buying the dip, is that if they step in, buy this dip from today, and they don't get run over as in the morning session, then this is just another false breakout, and we're going to see rotation back through the range. On the other hand, if they get run over, if you see some type of move back to the upside, and then you see sellers come in and really hit the market hard and then trade through 510 in the spiders, that's going to suggest that the probabilities have increased even more, because those guys that get run over buying the dip are not going to step back in and buy the dip the next time. So anyway, watch what happens on Monday. It's going to be very important. Watch what happens with the market internals, especially on a lower low and stronger breadth. Now, breadth was fairly weak today, but it could still get weaker on Monday. But that is for the market to determine, and we'll find out within the first hour of trading what to expect. Once again, expect the fact that we are oversold, extremely oversold, so there could be some type of a pause. But most important, if we break through 510 on the spiders and trade through that and close below that, then we have broken this trend and we have a greater degree time and price countertrend rotation in the process of developing. Have a great weekend. It should be a great opening on Monday.